This conference will now be recorded.
Okay, fine. So yesterday we are learning about ledger subledger concept. Let me recap what we have discussed yesterday and then we'll proceed. So the customers, all customers will be mapped to a customer group. Customer group will be mapped to one ledger account. Customers are mapped to customer group. Customer group will be mapped to ledger account. Or customers can be mapped to the ledger account directly. This is also available. And all customers can be tagged to one ledger account. These are the three options available in the system. Let me show you that one in the system where we can map. Accounts receivable module, setup, customer posting profiles. In the customer posting profiles, if you click add, you have option called table, group, all. So if you select group, then you need to select the group, which group you want. For this group, you are mapping ledger account. Whatever it is. Okay, that is one option. Otherwise, you can select table. Then you can select customer. Specific customer. And you can map the ledger account. Or you can select all. Then no need to select customer or customer group. You can map ledger account. This is called ledger subledger concept. Ledger subledger concept. So you can map table customer directly ledger account, or customers are linked to the customer group, customer groups are linked to ledger account, or all customers should be mapped to one account. So always the first priority is table. The postings, whenever you are posting, table level is the first priority. Next group level, next all. The same thing here it is available. Table, group, all. Understood this one? So in the system, you can map table level, group level, or all. Table level is the first priority, group level is the second priority, and then all is third priority. Okay. Here for 30 group it was mapped 130100. For 90 group it was mapped 130300. For all it was mapped to 130100. Okay. We'll create table and we'll map. What I will do, I will show you practically how it will be affecting. Okay. Let me create one customer. So this is ledger subledger concept. It is not only Dynamics AX, any ERP it will be there. Okay, I'm taking duplicate. Okay, so here let me verify what are the customers available. So 41 customer is there. US-042, let me create one customer. Suppose I'm creating Rama Electronics. Customer group, I will map 30. Click OK. So terms of payment is automatically populated from customer group. So US-042 it was created. For this customer group is 30. But what I will do, I will go to accounts receivable, customer posting profile, setups, customer posting profiles. So I'm adding this US-042 Rama Electronics summary account 13. So in between there is no account here. Okay, so 130110 I'm mapping. For this 130100, for this 130300, 13300, it is 130100, but here 130110 I have created. Okay, now if I do any transaction, whether it is a free text invoice, whether it is a payment, then let us see. Suppose I will do free text invoice. I'm creating US 042. So it was filled all the details. Now I'm selecting ledger account, some 4 series revenue account because it is a revenue. So I'm entering, suppose for understanding purpose, 598. I'm entering 598. Now I'm posting. Click OK. So transaction was posted. Transaction was posted. Now if you verify invoice journal, voucher, look at this one. It is 130110. accounts receivable foreign something 130110 it was posted customer account data to revenue account credit. Suppose I have removed this one. So I have not mapped. Then what happens? Let me create one more transaction. So the customer balance will be same. So let me take a duplicate. So if you go to the customer balance, there is no issue. It is 598, it will show, but the ledger account is posted to one account. Let me show you. US 042. So if you verify the balance in the customer, it is 598, it is showing. If you look at the transactions, it is showing the balance 598. But in GL, it was posted to 130110 because we have mapped 130110 earlier. Now I have removed. That is table level mapping I have removed. Now I am doing for the same transaction. Yes, 042. Now I am entering 599. Suppose some revenue account. I will enter 599. I'm posting here. Click OK. Earlier table level mapping is there. That is the reason it was posted to that 130110. Now it will be 130100. Look at this one. It will be posted to 130100 accounts receivable domestic. So system will verify whether table level mapping is there or not. If table level mapping is not there, it will verify group level mapping. If group level mapping is not there, it will verify all. If it is that also not available, it will throw error message. Okay, so the first priority is always table level, next group level, next group level, next all. Understood this concept? The same concept is available in vendor posting profile also. Same, exactly vice versa. Same. Any confusion here or any doubt? Is it clear? Yes or no, please, at least.
Clear.
Okay. So this is looks like very simple, but it is most important for finance consultant. Okay. Yesterday I have explained like all customers are subledgers, all vendors are subledgers. I have explained. Now I told you like even items also. So items means where it is available. Here for items means it is inventory management, setup, inventory, item groups. You know already item groups. We have discussed one time. I have shown you. In this, you can map the ledger accounts. Okay, but where it is table level, group level, all where we can see it is not showing here. So you can click on posting. It will show you here. Table group all. Table group all. Here also it will be available. So table means item. Let me show you. Table means item. Group means item group. All means all without anything. So even item masters, items also based on item, if you want to separate posting, actually the best practice, as I told you, group level. That is the reason each item group level we have map ledger accounts. This is the best practice. But if you want to understand the posting profile, same here also available. So it is sales order. The way of representation is different. It is same. Purchase order, inventory, like this. So you can see from here also the same cost of units delivered, cost of units sold, delivered, those things, the same options here also available. See, cost of units delivered, cost of units, so cost of goods sold, delivered, all these things available. Okay, so same here, but usually, as I told you, like even it is a customers or vendors or item, for anything, group level mapping is the best practice. That is the reason it was mapped group level. So as I told you, customers, it is in the customer posting profile. Vendors, it is vendor posting profiles. Item means item group. Or in the item group, you can click on posting. Okay. Otherwise, the same thing you can directly see from collapse all, setup, posting, this same form. The same form you can see from here also. This is item posting profile. Openly if I speak, customer posting profile, vendor posting profile, this is item posting profile. Okay, so accounts payable means vendors, accounts receivable means customers, items also I have explained, and cash and bank and fixed assets you will understand later. I have not started explanation about that one. Clear? Any doubt till now?
Satya, we have like so many accounts over there, right?
Hmm.
So can you explain us like why one series account was like chosen for customer posting profile, and similarly like item group, like which series accounts like chose it like
Sure, Varma. So actually, like you have joined late, I know. So there is a explanation earlier, some explanations. So I will provide you the recorded sessions. You can go through that one. And on top of that, if you still want, we'll discuss points definitely on that one.
Okay, sure.
So just I will brief you what it is. Whatever you have asked me, let me brief what it is. Chart of accounts classified into balance sheet and profit and loss account. I have explained detailed, but let me brief you. So this once again bifurcated into assets and liabilities. These are the two. Okay, so liabilities is further bifurcated into another one, equities. So debit means what comes in, credit means what goes out. So whatever you are going to receive money means from the customers I'm going to receive money, because I will generate invoice, so I will send the material, I will receive money, then it is customers are assets. Our inventory, it is in my warehouse, inventory is there, so it is my asset, and bank accounts is my assets. So that is the reason customer balances are in assets. That is the reason one series we need to map. Inventory, it should be mapped in one series because it is our wealth, inventory. Banks, fixed assets, these all are in one series. Liabilities, you need to pay money, that is vendors, and there are some more payables will be there. And equities means the investors. So investors means company has to repay to the investors. Company has to pay back to the investor. If any investor is withdrawing, company has to pay. That is the reason this equities is also a liability. So this is balance sheet. Assets always debit, our money. Customer balances is our money, because I need to receive money from the customer. Inventory is in my warehouse, inventory is there, it is an asset. Bank accounts is asset, fixed assets are assets. Clear, Verma? All these things at least high level?
Yeah, yes.
So profit and loss account, it is revenue and expenses. These are the two terms in commerce. In commerce, only two, revenue and expenses. Revenue means it is actually, it will be posted in credit, and expenses will be posted in debit. It is quite opposite to balance sheet. So for that, I have given example, x plus 5 equal to y. Then x equal to y plus 5 or minus 5. Minus 5. Once it is moving from that side to this side, it will become minus. In the same manner, this assets is a positive here, debit always. For liabilities, it is credit. For investors also it is credit. Now it is your money, revenue is showing in opposite direction. Profit will be shown as a negative. And loss will be shown in positive. This is commerce. So here revenue is credit and expenses is debit. Okay, it is quite opposite to balance sheet. Now this revenue is classified into two types, sales revenue and other revenues. So sales revenue means through sales whatever I am receiving money, that is sales revenue. Other than sales, if I am getting revenue, that is other revenue. This is giving numbering as 4. This was given numbering 7. In Dynamics X, it is any numbering you can give it. And expenses are classified into two types: purchase expenses and expenses. This is 5 and 6. So this is through purchases. If you are purchasing material for trading, then it is purchase expenses. If you are purchasing material for your consumption, then it is expenses. So 6 series is for your employee benefit. I need to spend a lot of money. I need to purchase water bottles. I need to arrange petrol expenditure. I need to arrange travel expenditure. I need to arrange accommodation, meals expenditure. I need to pay salaries. All these expenses are this one. If you are purchasing material, then it is a purchase expenses. So this numbering is given separately as a last 7. 7 is last. So the difference between sales value and purchase value is a profit to organization, because the profit I'm getting through purchase minus sales. I mean to say sales minus purchase value. Here purchase expenses means cost of the inventory, that is cost of goods. So purchase expenses is also called cost of goods. So sales value minus cost value is the profit to organization. So sales values will be posted to 4 series. Purchase values or cost of material will be posted to 5 series. 6 series means all expenditure, means travel expenditure, meal expenditure, salaries expenditure. There will be so many expenditures will be there in the system. So there are many ledger accounts in real-time scenario. 6 series. There are many expenses. That is office expenditure. It is manufacturing expenditure. So many. Electricity bill payment, rent payment, all these are expenses. Understood? High level at least.
Yeah. Is there any reason like profit and loss behaves different than like a balance sheet? Or like
So
we
that
have to
is
follow as a
commerce. We have to follow commerce terminology.
okay, that's
Actually, the reason behind it is any entry is a double entry system in Dynamics. Not only Dynamics, any ERP, it is a double entry system. If it is a personal accounting, it is single entry system. If it is a any transaction, it is double entry. So if it is a customer invoice posted, then customer account data to revenue account credit. This is your money, you are going to receive money, but this is customer account data to revenue account credit. Customer account I have mapped already debit. This is money, this is my money I'm going to receive, but you need to balance this one. That is the reason in the balance sheet side I have entered debit, and the P&L side it is credit.
oh,
This
okay.
is the money you are going to receive.
Okay, so to get like offset like nullified
Exactly.
effect,
Yes.
one place we have to do like a minus, and that
Yes.
is P&L
Exactly.
accounts which use like minus. Okay, got it.
Exactly. Fine. So I will provide you the links, whatever till now it was discussed. I will provide you the recorded sessions so that you can understand. Fine.
Okay. Yeah.
So anyone has anything any doubt here? Anyone, please. So this is commerce. To be frankly, you need to be very much clear about this one, everyone. Okay, I hope it is clear. Give me 1 second. This date is 10th November. Okay, fine. Let me go back to our application. So you understood about ledger subledger concept, ledger subledger concept, as well as the commerce discussions. Let me go to general module. So now small topics I'm going to discuss today. First one is we know chart of accounts we have discussed already. Chart of accounts we have discussed, but let me show you chart of accounts in the system. Let me recap. General ledger, collapse all, chart of accounts, accounts. Here there is main accounts and chart of accounts. You can click on chart of accounts. You can create any number of chart of accounts. You can create. So while creating chart of accounts, the best practice is, so here as I told you, like one series means assets, two series means liability. If customer in case he wants one series liability, two series assets, you need to follow. This is not a thumb rule. This numbering is not a thumb rule, but this is a thumb rule. It's a thumb rule. Debit means what comes in, credit means what goes out. It is standard. But this numbering is not mandatory. This is a best practice. Best practice means this is preferable. If you want to follow, you can follow. If you don't want, your wish. But balance sheet has assets and liabilities. Profit and loss has expenses and revenue and expenditure. That's it. So this revenue is further classified into two: sales revenue and other revenue. So just I'm showing you shared chart of accounts, one series assets, two series liabilities. Look at this one.
So, but this will we only configure, or will it be predefined and validated from business side?
Business people, they will create, they will arrange all those things. You are on top of that, you are going to suggest best practice. It will not be configured. So based on the business requirement, they will have their own set of chart of accounts. But suppose you are going to implement, just 1 minute I will explain you. Just suppose we are implementing in India, we are implementing in Singapore. Both companies are sister concern companies, one company only. One company is in India. Otherwise, take the example, one company is in Singapore, another company is in Malaysia. For both companies, you are going to implement. So you can coordinate between this Singapore company and Malaysia company. You need to coordinate, and you need to make one set of chart of accounts is good for at any point of time. If two companies are following two different set of chart of accounts, if they want to consolidate, it is complex. So that is, you can suggest this is the best practice, because a Singapore company, they are following some set of chart of accounts. Malaysia is following some set of chart of accounts. If you want to combine, otherwise another example, Hyderabad, one company, Mumbai, another company. These companies are, both companies are only one owner, like a one person, the same company. One is in Hyderabad, another one is Mumbai. So if they are following differently, you are a coordinator between these two legal entities to come to only one set of chart of accounts. Then this Hyderabad people will speak like, my set of chart of accounts is correct. You are like, Mumbai people need to follow my set of chart of accounts. Mumbai people will speak, the users, business users, they will speak like, Hyderabad people need to follow my set of chart of accounts. Then if it is not consistent, then you can propose this is the best practice Microsoft following. Then you are the coordinating between two these legal entities for best practice. Otherwise, Always the set of chart of accounts will be, the ledger accounts will be given by business people only. Blindly you need to follow. But before getting into import into the system, you are going to suggest in a best practice. Yes, Sanita, please tell me now.
Okay. And that is where you're saying, as a best practice, we in that main account we put this particular series,
Exactly.
one series for okay. Um,
Hmm.
okay, sir. I won't say I understood fully, but yeah, I want to go through it one more time before I
Yes,
ask anything else. I need some time, I think. Yeah.
no issues, fine. Okay, so fine. So this is the best practice, set of chart of accounts. Next, financial dimensions we understood and accounting structure we understood. Fine. Now, currencies I have explained long back. Financial dimensions financial dimensions already, we have discussed. Accounting structure also one session we have clearly understood. If it is required, definitely we will discuss. Next, currencies. Currencies I have explained, but I have not shown in the system. Let me show that one. So, general ledger, collapsal, currencies. This currencies will be default available. You need not to create any currency. In AX 2012 and D365 currencies are available. Of course, if it is a long back version, that is AX 2009, the oldest version, 10-12 years back, we need to create each and every currency. Whereas in D365 on 2012, you need not to create, it will be available by default. So DAT company will be available. In that company, it will be available by default, and you can use in any company. You need not to create any currency. As I told you yesterday or day before yesterday, China has two currencies, China yuan and RMB, some other currency. China yuan is international currency. That currency only available in the system. If you want another currency also, if you are implementing for China, that may be required some, like you need to create that RMB if you are implementing for only China. But in general, we are going to use only one currency, that is China yuan. It is available by default. All currencies in the world, it will be available. This is currency master. Okay. Next, and currency exchange rates. So currency exchange rates, here you have option. You can create exchange rate types, any exchange rate types, and you can enter exchange rates between currencies. Okay, currency exchange rates. This is, you can enter exchange rates. Now, if you want integration between this currency exchange rate to this one, then here configure exchange rate providers. Anita, you have asked me earlier, how can I do this one? So this is already configurable. Code is written backend. So there is a connector between that that website versus this one. So using that website, you can connect this one. It is already there.
Okay. So one more thing over here. Now, like suppose now the customer is China. So this at the localization level, uh, it will be configured with the Chinese currency. But if it is an overall global application,
Hmm. Hmm.
so will there be like some sort of a place, like say for example the subsidiary company or one branch is at China, but the overall company is in the US, like that. So
Yeah.
and if a top management wants to view it, so
Hmm.
everything will show only in dollars, because dollars by default is accepted in. So will that get converted and show as that particular report only, or again like something else has to be done? Because me sitting in the US, I may not understand what my branch in China is actually showing at a first glance, at least.
Yes. So that is for that consolidation process is one topic, advanced finance consolidation topic. So at that time we are going to discuss how to do it. That is another module,
Okay.
consolidations.
Oh, okay.
I will discuss this one in future, but
Okay.
definitely it is
Okay.
one of the topic. And
Okay.
localizations also is there. Taxation or localization concept. I will explain you what is this localization later, definitely. Okay.
Okay.
If you want, you
Okay.
can write down in your pending points. One is localization point, another one is consolidation process. We need to discuss a lot. Fine.
Okay. Okay.
Fine. So the connector is this one. As I told you, like current figure exchange rate providers. So with the help of developer, they will configure this one. A short, maybe less than half an hour work, and it will be connected. So majority code was written already, exchange rate providers. Okay. So you need to configure. Fine. Okay, let me go back. General ledger. So exchange rates, currencies, and then configure exchange rate provider means the connections. Okay, and then exchange rates you have understood. Foreign currency revaluation I will explain later. That is one of the topic, important topic. We'll discuss this one later. Next, currencies I have explained earlier, but just now only I have shown where it is available. Next one is fiscal calendar. Fiscal calendar also have explained, but I have not shown in the system. Let me show you that one. So in general ledger, ledger setup, fiscal calendars. So here, if you look at this fiscal calendar, the periods are 14 periods will be there. Look at this one. Opening, if it is India, April to March, and closing. If it is some other calendar, this is opening. Period 1 means Jan, Feb, like this up to December, and closing. So fiscal calendar will have 12 periods. The same 12 periods are there, and along with this 12 periods you have opening and closing. Look at this one. For any calendar, there will be opening and there will be a closing. Okay, what is this opening and closing? What is the purpose of this opening and closing? That you can understand at the time of year-end process. I will discuss that year-end process later, but after some time you are going to learn this year-end process. So this is one of the topic. At that time you will understand, but you need to remember fiscal year, like financial year or fiscal calendar, is 12 plus 2 periods. 12 periods plus opening and closing. 12 periods plus opening and closing. Okay, this piece of information I have explained in the notepad only. I have not shown earlier. That's why I'm showing you now. Fine. Any doubt in this? Fine. Next, there are many scenarios. Now, today I will introduce one topic, that is foreign currency revaluation. But I will show you tomorrow what is this foreign currency revaluation. Okay, these are pending topics. We'll discuss this one later, not now. Okay, what is this foreign currency revaluation? Just I will introduce the concept. Tomorrow I will show you a detailed explanation. Suppose, example, I'm planning to purchase a laptop. I'm planning to purchase a laptop. Then what I will do, I will check what is the cost of this laptop here in India. I'm staying in Hyderabad. I will validate in Hyderabad what is the purchase, what is the price of this laptop. Suppose I understood it is, I want the latest model with high configuration. I have verified everything. It is around 1 lakh. It is around 1 lakh rupees. So high-end configuration I'm planning to purchase. It is 1 lakh. It is like this is the 360 degrees flip and high configuration 2 TB hard disk and 32 GB RAM or 16 GB RAM something. It is all cost is 1 lakh. Then I have verified the same laptop in USA. My friend is staying in USA. I have verified. He told me like it is 1000 US dollars. He told me 1000 US dollars. Then I can think like whether I need to purchase here or I need to purchase from USA. If I am purchasing from USA, now my friend has told me 1000 US dollars. 1000 US dollars. Then I will calculate, it is now current rate is 75 rupees for suppose 75 rupees, $1 equal to 75 INR. Then 75,000 if I pay, 75,000, I will get laptop. So my friend is coming in the next month, suppose. Then I can take this laptop from my friend. Now it is 75,000 rupees. The laptop cost is 75,000 rupees. Whenever he is coming next month, suppose next month, December month, Christmas festival, he is coming to India. Okay, now at that time, whenever he is coming, US dollar is equal to 80 rupees. If it is 1 US dollar equal to 80 rupees. Then initially what I thought it is 75,000. Now I need to pay 80,000 rupees. So my friend told me like 1000 US dollars and I have converted into INR and I realized, I thought I'm going to receive this laptop at the rate of 75,000, but whenever I'm receiving at that time or once it is received, when I'm paying money to my friend, at that time I need to pay 80,000. Here my friend has not done any mistake because he told me 1000 US dollars, and it is because of this conversion. Because of this conversion, I'm going to lose 5,000 rupees. Initially, what I thought it is 75,000 rupees. Now I need to pay 80,000 rupees. Suppose that US dollar rate is changed from 75 to 70 rupees, 70 INR. Then while doing payment, I will pay only 70,000 rather than 75,000. So because of it is decreased, then I'm going to gain 5,000 Indian rupees. This is, I have taken a simple example like laptop. When I'm doing business, suppose I'm importing material from USA. Suppose if I'm importing material from USA, then there will be, because of this exchange rates, once received the material and invoiced, and while doing payment, there is a exchange rate gain or loss. There will be exchange rate gain or loss. Those will be impacted in the system heavily. So to accommodate those gain or loss profits, gain or loss, whatever it is there, for that we need to run this foreign currency revaluation. Foreign currency revaluation, if it is any imports are there. In the same manner, if I am exporting material to USA, or if I am exporting material to Singapore, if I am exporting material to Australia. So if it is in case your business has imports and exports, then there is a chance of gain or loss because of this exchange rates, So those exchange rates gain or loss should be recorded in the system. So at least every monthly once, you need to run this foreign currency revaluation for exports and imports. Imports means accounts payable, vendors. Exports means for customers, accounts receivable module. So foreign currency revaluation you need to run in AR and AP. It is must if you have imports and exports. And this foreign currency revaluation is exist in cash and bank management also, recently introduced in cash and bank, and it is available in GL also. So in 4 places, in 4 modules it is available, foreign currency revaluation, general ledger, accounts payable, accounts receivable, cash and bank. Actually in cash and bank, foreign currency revaluation is not exist in 2012. In the previous versions it is not available. Recently in 10.0.5 or 6 it was introduced recently. I mean to say 1 year, from last 1 year only it was introduced by Microsoft. Foreign currency revaluation can be executed for banks also, for bank accounts also. It will impact for bank also. It was introduced in cash and bank management also. Earlier it is available foreign currency revaluation in 2012 or 2009. It is available in GL, AP and AR. These 3 modules available, now recently introduced in cash and bank in D365. In the latest version, cash and bank also it was introduced. So this foreign currency revaluation for cash and bank management is available in Russian language. In Russian language, it is available from old versions also. I mean to say, in 2012 versions also, Russian language, I mean to say Russian country, cash and bank foreign currency revaluation is available. For them, it is mandatory. It is available, but for all legal entities, it is available in D365 only in the latest versions. Okay, this is a brief about foreign currency revaluation. We will discuss practically. We'll create one transaction and we'll do transaction, and how it is impacting, how it is changing, we'll understand tomorrow. I'm stopping here for today. Any more doubts? Any more clarifications? If nothing, I'm stopping here for today. We'll connect once again tomorrow morning 6 a.m. IST. See you. Bye.